Yeah.
Am I audible? Hello?
Yeah.
Hello.
Yes.
Yeah, I have joined through phone.
Oh, okay. So yesterday somebody in the YouTube comment was saying that I'm not explaining properly. So I just wanted to know if you guys are understanding or not.
Yeah, we are following. Yeah.
Okay. That's good.
Maybe the comment was because of lack of Albrook's knowledge.
I don't know. I asked him if he has books, some concepts at least. I mean, he has read some concepts at least. He didn't reply, but yeah. So I was like, even when I'm explaining, I'm rarely asking if you guys have any doubts. So I just wanted to know.
Yeah, right. Maybe ask him to watch the micro pullback video first. Then he might be catching up.
So let me start with today's price action. Small
Yeah.
gap down from yesterday's close. It's a okay, decent enough gap.
Your screen
Chart is
showing.
not.
Okay, sorry.
Is there any disturbance from my side?
No, that's fine. Okay. So first bar of the day, decent enough gap from the yesterday's close on Nifty futures and Nifty 50. It is not a gap down. It is opening somewhere near yesterday's close. If you consider this is yesterday's close, it's opening somewhere. It's a very minute gap, so you can ignore it. Either way, huge bear bar closing on its low, probably a second leg. You're getting a follow through bar, decent enough follow through bar. It has a huge wick on its bottom, but still fine.
Yeah, to me,
Yes.
how do you deal with this candle? You see, the first candle is a very big candle.
Yeah, when the volatility.
So, how do you trade in such situations?
Rarely. If I want to, I'll wait for pullbacks or micro pullback structure. Because even if I take a short here, even if I take one contract, maybe it will be more than 4,000 risk on this account. Also, I didn't take any trades here. Some stop loss of the swing position as it. So
the thing is, maybe one candle big, or sometimes you might see 2, 3 candles big, and
yeah, if you're
sometimes
getting consecutive,
most of the time it goes sideways.
Yeah.
So do you deal with such sort of things?
Firstly,
generally, when I see such things, I generally shut up. Don't know what to do on such things.
Okay. So thing is, either you make up your mind saying that this is not the only setup you're going to get today. That is first thing, because there is always some better setup coming if you leave this trade. So you don't have to have that FOMO. But if you did want to trade, maybe a 50% retracement would be a better, limit order entry would be better. If you're getting consecutive bear bars, then I would say wait for a micro pullback setup, or you will get, maybe if you get let me see if we got a weak bear bar, sorry, weak bull bar. Okay, we got a weak bull bar. You can either enter on limit order one tick above this bull bar. If in the next few hours it gets triggered. If it's not getting triggered, at least see if in later in the day, maybe in the mid section or the end of the day session, if it's touching this limit order. If you don't want to do that, you got this is a MPB, and this is inside this bar. This bar is inside this bar. Now you can put your stop loss here and enter here. Again, if you feel the range of this bar is still huge, maybe this bar's range is 50 points or something. Okay, it's not so huge. 20 points, it's still fine. So you can place your stop loss here and place your stop loss here, enter on one tick below this bar's low when the next bar gets triggered. That did get triggered. But keep in mind, you cannot expect a measure move of this bar. If you take a measure move, let's say from here to here, saying that okay, you expect a measure move to go all the way down here, it can happen. I'm not saying no, but it's unlikely, especially when the first bar of the day is so huge. If you go and backtest Nifty, whenever there is a huge bar on the open, the first 5 minute candle, it usually tends to go into a trading range sort of a price action. So it's always better to, maybe this is where you look for your measure move. Or if you say
50%
this,
of measured.
sorry,
50% of measured move is the advisable move.
yeah, that is fine. Or you can say, okay, 1 hour risk to reward. This is where you entered, you put your stop loss here. You're hoping for that. That is also fine. Now,
And one more doubt.
hmm.
Yeah, how do the 50% of the day work?
What do you mean by that?
Means actually, I mean to ask means the halt was at the 50% of the, or not 50%, the range 50%. If you take the
Entire,
yesterday's range, yesterday's entire range, if we duplicate it downside, that was the 50%.
you mean the measure move from the yesterday's range?
Yeah.
Okay.
Not only today. Usually, how do the 50% of the days or 50% measured move of the days? How do these work? Are they reliable support and resistance? I mean to ask.
See, thing is, better than looking for every preset yesterday's high, yesterday's low, 50% range of yesterday's range, or weekly, monthly. Yeah, it's good to have it on your chart so that if you get a reversal near that level or you get a major trend reversal attempt at that level, that is a reliable setup. But thing is,
Okay.
I would say rather rely on what the price action is doing right now currently. Because at times what you will say is if you're hoping for a reversal at measure move here, at times you will get a reversal, a good reversal too. But what happens at times is maybe this after this bear bar, if you got consecutive bear bars closing near their lows and a micro channel, this is a micro channel, but I wouldn't say this is a strong micro channel. So if you got a strong leg one and pull back leg two below this, who is to say that it will not have one more leg down? You can't say it, right? If the structure after leg two or spike two is a constructive L2 kind of a structure, then obviously it will go down. It is good to have this support and resistance and not saying no. If you want a reliable thing, then I would say look for major trend reversals at weekly low, weekly high, and yesterday's low, yesterday's high, or even if 2 3 days low is not tested, if you got a gap, let's say today's price action did not open somewhere here, instead it opened below yesterday's low somewhere here, and then you got 2 3 days of sell off. Now when you're getting a reversal attempt to this gap and that gap is filled and you get a major trend reversal with a higher high double top or somewhat some variation of a double top there, major trend reversal, that is a good setup. Either you look for gaps getting filled and reversals attempts there, or yesterday's close, yesterday's high, yesterday's low, weekly high, weekly low, weekly close. Whenever the trend is too huge, let's say yesterday was a good trending day, that 50% pullback works better there. So this was the yesterday's range from low to high. It's not a strong bull trend. It's more like a trading range, but it's heading higher in some sort of a channel. So here you can rely on the 50% pullback. Maybe you have limit orders placed there. That will work. So does that clear you out?
Yeah, fine.
Okay, now after MPB, we are getting 1, 2, third MPB, fourth MPB now. So obviously something is not right. And if you say you wanted a measure move of this bar alone, because that is a huge sell signal bar, they are also getting their measure move down. So this is a good place to get out of your shorts if you have, taken a position. Now, what do you make of this bar 9? Strong reversal, right? Micro double bottom. After multiple entry days, you are getting a W kind of a pattern. W meaning price went all the way down here. It went up. That is why it has a close this way and then going down again. So if we look at it on a 1 minute time frame chart, you can see there is some sort of a micro double bottom. It's much clearer here. You got a micro double bottom and also 4 consecutive bull bars closing near their highs, except for this bar. This bar is not a significant trend bar, but that's still fine. You're getting a micro channel. If you ignore this one bar, it's still a good micro channel. So what happens post that bar? Those who got in for a scalp, they got their scalp profits. Now, obviously, bears are still strong here, or not so strong, but okay, they got their bear spike type channel. What is the weak signal here? Maybe this bar is a weak signal because this is an implied reversal bear bar. Those who wanted to go long here, let's say you placed a limit order to go long here, or you saw this bull bar closing near its high, you went long here. But somebody who wanted to short this high, saying that this is not a strong reversal bar, they also got in. If they got in, maybe they got out here. If they didn't, they might scale in all the way up here or at the test of EMA and then get out of their scalps. I would say if you put your stop loss here and your limit order short is somewhere here and you put your stop loss here, if EMA is not catching up very quickly, don't scale in again. That will actually spoil your risk to reward and even the win rate. Okay, now those who shorted here, they got their scalp limit order short one tick over this weak sell signal bar, sorry, weak buy signal bar. Now it's a proper double bottom even on the 5-minute time frame chart. So is this a good long? Yes, but keep in mind this is volatile price action. Whenever there is a compact pullback and then you get a H2 failed H2, L2 failed L2, those setups work properly. Volatile structures do give you profit at times, but more often than not it's better to stay away because it will just fizzle out into a trading range. So if you get this the micro double or a double bottom structure, or you call it as a failed L2, it's better to scalp out. Okay, if they bought in here or somewhere here, now they are not getting good follow through bar, there is no upward movement. Now if they scale in 50% of this bar's range, what is 50% of this bar range? Maybe if they had placed a limit order here, now they're getting their break even exit. Let's say they bought in the close of this bar 15 and at the 50% mark. Okay, now this will be their average price, buy price. So this will be their break even. If they got greedy and said, okay, this is a good significant trend bar, maybe it will go to 1 hour scalp or 0.5 hour scalp, and they get trapped, they better get out at least at the stop loss or break of this pivot. Their stop loss would be somewhere here or here initially when they're trying to scale in and make a scalp work. But if they see this happening and price is falling below this pivot, they should be getting out. If they didn't, at least get out at this pivot. Now, this is a volatile structure. You're getting a micro double bottom. Also, you're getting a M pattern, right? And this is 2 consecutive bear bars. One is not a significant trend bar, neither is this bar is a significant trend bar, but let's say this is the decent bar and this is also a decent bar. Maybe on the Nifty 50 chart, same structure. Nifty 50 chart gave a proper L2 here. There was no H2 buy signal bar, but rather a decent enough L2 signal sell signal bar. But on the Nifty futures, if you say this is a 2 bar micro channel and also has decent closing, you can short on the close, or maybe one tick above this bar limit order you place, your stop loss will be here. You got your swing profit here. When you're taking a 2 bar micro channel, depending upon the context, you either swing or scalp. Don't forget that this is a volatile structure, so it's better to scalp out rather than hold it for a swing. If you got this huge sell signal bar, so if you got this huge sell signal bar, you would probably get out saying that this is a volatile structure, and also maybe sell climax. Why a sell climax? Because after a volatile structure, you're getting a huge bear bar closing near its almost near its low, and in the last 20 or so bars, this is the largest bear bar. Okay, this is also L2 sell signal. Spike 1, pullback, spike 2. Keep in mind, EMA has not been tested. There is no deviation from the price and EMA, but don't leave out the fact that this is coming out of a volatile pullback structure. So maybe there is a move, but it's always better to stay out of such structures. Okay, again, 2 bar micro channel for bulls. Is it okay to go long here? I would not. First of all, there is no space between the EMA and the current price action. Also, those who bought in this weak sell signal, weak bull signal bar, they made their scalps close to EMA. EMA has not been tested for 31 bars now. So all day long, bears have been in control. That is why EMA is not in contact with the price. So what happens first time the EMA has made, price and EMA are in contact? Probably limit order bears are there. So it's better to not take this trade. Also, those who bought this, saying that this is a weak sell signal, weak buy signal bar and shorted one tick above this bar, they got their scalp down. See, in E-mini, when the price is around 3,000, 2,000 to 4,000, let's say, L. Brooks would scalp for a 5 point on ES mini E-mini. So if you say that Nifty 50 is around 25,000, you cannot scalp for 50 points, but at least 25 points is decent enough if you're trading the future cycle. So based on that, whatever momentum you get on the options chart, that you have to calibrate yourself, because it's not like you'll get the same kind of stop loss every time on a options chart. And also you have to consider the volatility. Volatility there can act in your favor if it moves quickly, and when you're scaling in, especially on the futures chart, it will be very easy for you to scale in. But on the options chart, when let's say you saw this as a weak sell signal, weak buy signal bar, you shorted one tick above this, you had placed the limit order to go short one tick above this buy signal bars high, and then you get a two consecutive bull bars closing near their highs. Although you had placed your stop loss here on the futures chart, maybe on the options chart it is already up here. So due to this two bull bars closing near their highs, so you're scaling, maybe you are scaling in 50% of this leg. Let's say if you take measure move from here to here, that is not a 50%, but since your stop loss is here, and this is the okay, this is the 50% mark already. So maybe 50% of this mark, or if options chart, you'll sell on a limit order one tick above this bar side. Why one tick above this bar side? Let me just strong sell signal bar, MPB, and this is within the MPB structure, and this was the highest price this micro pullback experienced. Obviously, when this bar high is taken out, though, okay, let's say you missed out this entire swing now, or scalp now. What are the possible places where you can enter on limit orders? 50% pullback, maybe there is a significant trend bar, maybe there is a weak sell signal bar, weak buy signal bar, or there are pivots. Now, in terms of pivot, this is where the spike pivot is, right? This is where the spike started from. So we will say, okay, or the gap, wherever. That is where the spike started from. Now there are micro pivots, right? Within the micro pullback structure, there will be the highest price the index or future chart experienced. So that will become a pivot. In swing point, or if you call a major pivot or a swing pivot, it will be this pullback, this deep pullback. So if I'm looking for some scaling trades here to go short, this will be my swing pivot. So this will be the minor pivot, this will be the major pivot. Major pivots are more reliable, but minor pivots work too. Why do they work? Especially when you are scaling in for a scalp, you might get a big up here and then a rally downwards. So keep that in mind. You need not scale in, especially at least for first 6 months. Maybe even after that, give it a 6 months period of time till you gain more experience. But just saying, if at all you want to scale in, there should be a logical scaling point. You can't okay, let's say you entered here wanting above this bear bars high. Now price is all the way down here, but it retraces somewhere here, and you get a scaling opportunity because there is a micro pullback or something. Now if your system says that you're only gonna, when you're backtesting and your system is only designed to scale in when there is a deeper pullback from your initial entry, you should not be scaling in on the second micro pullback structure. If at all you're scaling into the second micro pullback structure, it has to be in a strong trend. This is not a strong spike. First of all, this is a weak spike down after a gap down. EMA hasn't been tested, volatile structure. So even if you get a spike down and then an NPB, I would rather stay away from it and then just scalp out whatever positions I have than to just scale in and increase my risk there. If I do scale in there and I see this deep pullback, this will be my hard stop loss. I recommend against it, especially when the scalp has worked in your favor and price is somewhere down here already. It is better to scalp out given the context. This will come under calibrating your expectations. Based on how the structure is, you can change your expectation. Now bulls got the spike one, leg one pullback, leg two. Bears got the leg one pullback, leg two. Deep, not deep pullback, but let's say volatile structure and trading range price action. If you say this is a broad bear channel, yes, it is a broad bear channel. I'm not denying it, but it's more like a trading range than just a broad bear channel. Okay, now you're getting a buy signal bar. You say this is a double bottom, this is a good signal bar closing above, EMA, 20 EMA. Also, price is closing near its high. So good buy signal bar, trading range price action. Maybe if you say that this is the top third region of the trading range, there is no, there's not enough room for a scalp up. But if you say that it might go all the way up here to this trading range, okay, that theory might work, but it's not necessary that it will go all the way up here all the time. So if you do scale, get in on the close and you get this micro pullback and then a bull bar again, it's better to scalp out. If you haven't scaled in on the 50% range of this bull significant trend bar, it's better to scalp out here. I think price headed higher. Okay, price headed a bit higher, then you got a sharp reversal. Now, again, what is happening? Trading range price action. Bulls will get leg one pullback, leg two. Leg two will always be strong. Bears will get leg one pullback, leg two. Leg two will always be strong. Again, bulls got leg one pullback, leg two. 2 bar micro channel closing near their high, significant bull trend bars. But what is the context? Leg one pullback, leg two. So keep that in mind. Now, bears got their leg one, and this is significant trend bar. Maybe bottom third region is very close. So if you had placed, okay, if you didn't enter on the close here and you entered on the 50% pullback, you're already getting your scalp profits. And since you are in a trading range kind of a structure, it's better to scalp out. If you didn't, okay, now what is market doing? It's saying, okay, I'll take this as the trading range high and this as the trading range low. Now in the spike theory, if you say this will be leg one, spike one, pullback, spike two. If you say this was leg one, pullback, leg two, D pullback, leg three, that is also fine. Multiple legs up, climatic wedge, 1, 2, 3 PIVs, PIV1, PIV2, PIV3. Climatic wedge on a smaller time frame, There is no good sell signal bar. That's the thing to do here. Okay. Now, if you say that this is a L2, this is not a great L2 first of all, but it's closing at least below the 20 EMA. Structure is not all that great. Top third region is somewhere here, so you can say, okay, it's still a reasonable scalp. You can short that low. If you did short that low, what do you do when you see a huge buy signal bar? What you are hoping for, okay, this is not first of all an ideal L2, and neither it's completely near the top third region. You're not getting that signal. So first of all, reduce your risk, and also once you get a strong bull reversal bar, what do you do then? Exit one tick above this bull bar side. When the next bar goes one tick above this bull bar side, you'll exit. Let's say bulls bought this bar side. What are they getting? 3 micro pullbacks or MPBs consecutively at the top third region of the trading range. So what do you expect price to do? Maybe a micro double top and then a reversal down. Okay, there was not a micro double top, but again a L2 kind of a breakout. This L2 breakout is much better than this L2 breakout. If you see, this was a wedge bottom, and then the first reversal up, pullback, second reversal up. But given the context, this was still an okay shot, not an ideal shot. I would have liked it to go up again, and then a micro double top structure would have been better. But decent enough sell signal. If you didn't scalp out, you should be getting out here. Again, wedge test of this trading range high, weak, weak sell signal bar. So again, limit order entry for bulls. If they entered here, if they limit order got triggered on this bar, they're seeing a sell signal bar, which is significant trend bar on the downside. So what do they do next? Maybe they scale in at the 50% mark of this bull bar again. Maybe they scaled in, they got break even exit somewhere here or here, somewhere in this region. Once they get out, again a sell signal bar with a strong closing of. So bears got two significant trend bars, and bulls who got in on the scalp on the weak sell signal bar and then scaled in again, they got their break even exits. So this is a good shot. Any doubts so far? Hello.
No, nothing.
Okay. Also, if you say that this is a major trend reversal, I would argue not, because if at all bulls were strong, okay, they are showing their strength. That is why you're getting bull significant trend bars. But this is an overlap bar. They failed to close above the EMA. There is no moving average gap bar. And just like how I explained, there are features for parabolic wedge top pullback structures. There are also features for major trend reversals. There should be a moving average gap bar that will add to the probability if there are, if the minor spike attempt, this is the minor spike attempt, right? Minor reversal attempt. If this minor reversal attempt is very strong, meaning it's in a micro channel, most of the bars are bullish bars and they're closing near their highs. Most of the bars are bull significant trend bars. All those things add to the major trend reversals working probability. Now it's behaving like a trading range, and then you're getting a buy signal bar. Okay, where is the bottom here? This is the double bottom region. You're expecting a major trend reversal somewhere in this region. But once the price has tested this region, be it leg one pullback, leg two, or three legs down, that is a wedge kind of a test of this bottom region, forming a double bottom. The sooner you get a good buy signal bar, the better. But how many bars has passed since it has tested this region? 1, 2, 3, 4, 5, 6, 7. Sorry, 6 bars have passed. So that will again decrease the probability. Why is it decreasing the probability? Bulls are in no hurry to take the price higher. Only when there is an imbalance of power, you get a trade working in your favor. Okay, why do people sell this strong closing bar on its low? because somebody sold, you are getting this leg down, right? It's not like if somebody had not sold this bar, you wouldn't be getting this kind of a structure. And let's say if at all this was a climatic bar, you would have been getting a reversal bar, then a trading range, or some sort of a structure, test of EMA, maybe wedge test of EMA, or micro double top, or some sort of a test of EMA, and then continuation or reversal. But immediately you are getting a follow through bar and then an MPB structure, and 3 bar micro channel. Maybe there is a small gap between this bar's high and this first bar's low, bar 3's high and bar first bar's low. So all those add to the probability of price heading lower. But there is no urgency here. Once price tested this bottom region for a double top, if you are hoping for a major trend reversal, there is no sense of urgency from the bulls to take the prices higher. Okay, this is a good significant trend bar. Maybe you're hoping for 2 legs up or 2 hour risk to reward. But if you got in here and you saw this happening, spike 1 pullback, deep pullback, spike 2 deep pullback, spike 3, obviously you know that this is spike and channel, and in a channel you're already getting 3 legs up. Or just like how I told you to stay away from a trading range which has 5 swings yesterday, that is swing 1, swing 2, swing 3, swing 4, swing 5. Once it reaches swings 5, don't trade it like a trading range, wait for a breakout on either direction. Similarly, when you got 5 legs or 5 swings in a bull channel, it's better to wait and see what it does. Again, when I say what it does, don't forget that there are always 3 possibilities. What are those? Either it can, give a constructive structure and continue, or a failed structure and then continue lower, or it can, give you a trading range price action. I've already explained how to, analyze which of the 3 you should eliminate. If it's a volatile structure, obviously it's going to be a trading range or maybe a bear reversal. We don't know. If at all it has to continue, it will tighten up again, and maybe after the breakout, you can again look for an MPB or a pullback structure. But what does the odds say? Most likely trading range. So that will be your analysis. You will ignore the continuation of the bull trend. Now let's say it is breaking below the pullback structure. Maybe you're getting a failed H2 structure, or the previous spikes pivot, starting pivot, where the bull last, okay, let's say this is the last bull spike here, right? Maybe this pivot got taken out, and then you're getting a bare significant trend line. Okay, in this structure, it's not like a strong reversal down and a wedge test, and okay, you can say that this got invalidated and you're getting a bare spike, but there is no continuation on the downside significantly. Also keep in mind, overall, this structure is not clean structure like this. What I mean by clean structure: strong swing, strong spike 1, pullback, spike 2, pullback, spike 3. When you get a L2 here, it's more reliable, and if it's compact, it's better than a trading range kind of a structure. There should be okay, when you're taking a reversal trade, it should seem that bulls are, too eager to get out, and newcomers who buy the, okay, let's say newcomer didn't buy here, nowhere, he felt like, okay, price has already went all the way up here, maybe it will go up again. So maybe for some reason he bought here and they are getting trapped. Those who wanted to, bought here and here and here, they are sitting on their profits, and they see that this is a climatic wedge top and they want to scale out or exit partially or exit fully, whatever the reason may be. So you see that there is a, maybe there is a climatic behavior, a huge bull bar closing near its high, and the largest bull bar in the entire trend. That will also add to the feature. Maybe there was no test of EMA, and right now it's breaking below the EMA and closing strongly with a bear bar. So all those things add to the success. But when it's already in a trading range kind of a price action, it's better to treat it like a trading range and scalp out. And also, if you see, there was no good, okay, maybe this was a good L2 yesterday. This was a decent L2, not an amazing L2. Why? Because it is a volatile structure. I would rate it as a B minus. If I had to classify this setup, I would say this is a B minus kind of a structure. So that's good. Good in the sense if you're risking 1000, you will be risking 500 or something here. If you got your swing down, that's more than enough. It's better to scalp out here for all these reasons which I told previously. But if you did wait for a swing down, this bar gave you that swing down. So I'll end the review here and then continue with the class for you guys. Can you send your homework? Yeah. Okay. First bar of the bar is a trading range bar, then you're getting a micro double bottom. Now, this is not a good signal bar for bulls to buy, but okay, those who bought here made money. Now, if you see that this is a weak sell signal bar, and maybe you entered on a limit order to buy here, you got trapped. Maybe you scaled in somewhere here for some reason, and then it gave you a break even exit and maybe a small profit. Two bear bars closing near their lows, so two bar micro channel, and this is where the price reversed previously. So this is also double top. So it's good to sell these bars close